Now I see it recording. So, okay. So we are going to do a comprehensive top-down analysis on the year of forex futures today. Basically, we are utilizing ICT concepts where let's try to break down the current market narrative, like look at where the price is likely heading to, and maybe how the higher time frames institutional orders like trickles down into our 15-minute execution time frame. Before starting up, so as always, trading always involves risk, and this is my personal read on price action, like based on how I interpret algorithmic signatures in the market. So yeah, let's start with daily time frame to first establish our macro bias, and maybe then drop down to 4 hour to find points of interest, and like at the end we'll just drop down to a 15-minute chat to study the intraday daily of price, and like specifically looking at kill zones, and maybe see if we can find any time-based liquidity runs. So okay, so let's dive right into the daily chart first. So on this daily chart, you can see here we're marking up the 1 day time frame. So each candle denotes an open, high, low, and close of a day. So each candle represents a day. And so the first thing we need to identify is the overarching draw on liquidity, like where the algorithm is trying to reprice. If you can notice, let's start from here. It formed a high here, right? And we try to come back to this high. Let's see if we can find equal highs or somewhere nearby. If you can see here, is the same price, is the same level right here where it rejected. So definitely we can expect the price to react at that price. And similarly, if we can see this high here, we can find multiple instances where it tried to come up to that price and reject. So first we expected some resistance there. So this price, which is 18675, 118,675, sorry, 695. Okay, let's round it up. uh, institutional orders always. Uh, institutional orders, they love to work around the rounded numbers. So let's consider 1 8. Let's round it to 7. Let's do this. That's a big round number right there. See that number, 118,700, right? So we try to come out above that price and rejected drastically. You see that bearish candle right there. So that means the institutions are definitely trying to hold that price. That defend that price. Let's mark it right here. It went down to this, where you also can see it here, pretty much the same price. It acted as resistance, rejected from there on, and it pierced through that price. If you can see here, there is some consolidation right here, and just try to manipulate down, and this is expansion. And okay, let's leave that and let's try to find the liquidity pools. So there will be liquidity buy stops right here, and buy stops above this. So now institutions try to capture all these orders, or let me try to this above this price. We can expect some liquidity, right? Now, mid September of 2025, we try to capture all these, run all of those stops, and they convert it into orders. Try to manipulate and hit the low, and now made equal lows, and we can expect liquidity. Let me just copy this. You already market this as, let's consider this one as liquidity. So you can find liquidity below this low and below these equal lows, and can find liquidity above these lower highs. It formed, I mean, it went to form a high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and lower high. So you can find some liquidity right here. So institutions went on to take out those liquidity above these highs, and it made a new higher high, higher low. Now even above this high, we can find liquidity above that high. So it went to take out all the liquidity above this. So this liquidity is taken out above liquidity above this highs. These are equal highs. So liquidity is taken out, and once this low is formed, find we can expect sell stops down here. These are equal lows, so we expect to have sell side liquidity resting below these lows, right? So we can expect institutions to take out the liquidity below this low, and we can also find liquidity below this low, right? Below these equal lows. And so it came down, taking all that sell side liquidity, and currently our market is trying to it's in a range bound market right now, and it is we saw a little consolidation, and so from here, let's move on to 4 hour time frame to see what we can interpret uh, on this 4 hour chart. So let's on this 4 hour chart, we're down to 4 hour chart. So yeah, I mean, this gives us like a much clearer picture of the like recent structural shifts, where the current algorithmic pricing cycle is. So let's so so basically, if you can see below this equal lows, like we can clearly see the aggressive sell-off that took place. But I mean, look at what happened immediately after it tried to hit this support level. We can see, I mean, it didn't try to like consolidate and try to bleed lower. But if you can observe that, we saw an energetic and high momentum displacement back to the upside. See this, if you can see these candles, the green candles, big momentum, big momentum, and big momentum right here, right? You can one more green candle right here. So Yeah, I mean at this, and right now we're at this. I, so this is the recent price. Also try to take resistance right here. We saw some resistance right here, and right now it is acting as support at the price of 1.16860. So so basically, I mean, like notice how this level like acted as ceiling during the initial bounce from the support level here. Every time it tried to come down, it tried to find a ceiling at this level, right back here onto this support at 150 50, and tries to bounce back to that resistance resistance level, or we can call it ceiling as well, and sell off immediately once more. And this time you can see a large bullish candle piercing through that resistance level, and now this resistance level turned into support. If you can see, it tried to break down, but it failed and moved up, right? We tried twice, but it failed to break that level. So right now we can consider that as a solid support level. So when in ICT terminology, we say like when a level of resistance is like broken with strong displacement, it often acts as a mitigation block or a break, or it also, we can also call it a breaker block when we see a return to that same level. So we rallied up, engineered some short-term highs, and then dropped back down. And now, so these are the higher time frame prices, price levels, where it either acted as support or resistance. So we can expect, definitely expect liquidity above those levels, right? So that one above this 118360, and above this which price, which is 119420. So basically here, I mean, keeping our daily bullish bias in mind, where 4 hour chart is leading us to, it is definitely drawing to these clean highs. So as mentioned, where our first major pool of buy side liquidity is at 118360, and uh, a larger macro pool, we can say, is marked at 119435. So if you can look at the most recent price on the right here, like we have a strong executive bullish for our candles. You see this? So, I mean, we can anticipate that the market is like showing an urgency to like reprice higher. So basically, there is no major overhead resistance until we hit that first pool of liquidity. So basically, our narrative, like we are just looking for continuation setups to the upside until that buy side liquidity is taken out. Now that we have our perspective on the drawn liquidity on both daily and 4 hour time frames, let's drop to 15-minute time frame to see how the price, what we can anticipate going further. So right here, these are last 3 days. Hold on. One, two, yeah, last 3 days of price action, very much. Right, so on this 15-minute chart, this is where like we try to blend price with time. So I use ICT Killzone toolkit for all these time zone mapping, which I it's pretty much easy. instead of just, you can also remember, I mean, with time it automatically, you'll get all the timings onto the back of your mind. But for now, for your easier understanding, I'm just I try to just put on indicator, right? Okay. So as you already know, the Asian session, which is marked with pink, London with sky blue, orange, and New York beyond with dark blue shade. So these are not entire time frames. These are just Asian kill zones where, I mean, these are session kill zones where we expect the price to be highly active and volatile. So uh, now, so basically, I mean, if our higher time frame bias is bullish, like what is the classic ICT profile we want to see for a daily candle? So we want to see consolidation in Asian session, manipulation down in London to like form a lower low of the day, and then expansion in New York. So that's a classic ICT formula, right? So let's look at this specific day here, right here, which is today, 10th April 2026, right? If you can notice, Asian session here is tightly consolidated, doesn't move much. And if you can notice what happened when the London opens, it just created a Judas swing, like price drops below this. So let me mark this. I think I have. Let's see. So yeah, Asian high. Asian. Let me just stretch it so that you can easily understand it. So it took out the Asian low, right? And trying to, I mean, it tried to trap the breakout traders and also sweep the liquidity below this Asian low. It gained enough momentum and orders to move the market upwards, right? It displaced from this point till the New York Open. Yeah, it taps into like into a discounted array, and then the New York steps in. If you can notice how the New York AM session like also provided some more like meat of the bullish expansion here. So let me see if you can find more examples. See this? Most of the momentum happens in London Open, New York Open, and London Close, which pretty much dissect in between the New York AM session. So let's see what else we can interpret from this chart here. See, I mean, now, I mean, look at this most recent data on the right here. Like we see the same fractal nature, like formation, consolidation, a brief dip, or some, you can also call consolidation in that London session, and then New York aggressively pushing the price higher towards our 4 hour and daily liquidity targets. So like when you trade the 15-minute chart, you are not just looking for random patterns. You are like waiting for a specific time of the day, like the kill zones, to see if the algorithm is going to manipulate price in the opposite direction of your higher time frame bias. And like, because right now we are bullish, we want to see those like short term drops in London, or maybe in the early New York. We can view those drops not as a trend change, but as an opportunity to buy at a discount inside. So most of the cases there'll be an order block or a fair value gap formed, getting the resting liquidity above. So you have to keep an eye on those particular scenarios. So basically you just have to wait for a setup, and we can't force the market to expect what we do. I mean, we can't expect market to do what we expect. So basically, yeah, I mean, to summarize this video, I'd say I'm still learning. I learned that top down analysis is basically the key to high probability trading. So we started on daily to find that drawn liquidity and liquidity pools, which is currently the buy side pools above the mark price levels. And then we just move to for our time frame to confirm that bullish market shift, and maybe identify our like intermediate mitigation levels. And finally we just drop down to 15-minute chart to understand that intraday AMD cycle, where it's like data accumulated here, manipulated, and this is the distribution from here, distribution, right? So it basically allows us to frame that high risk to reward trades during uh, specific time of the day, mostly inside the kill zones. And yeah, right now, like until the higher time frame buy side liquidity is taken out, the safest place to be is to look for discounted arrays to, I mean, inside the lower time frames to get into that long positions. And yeah, I just hope yeah, this breakdown helped to like clarify how this to piece together all the multiple time frames, like starting from higher time frame to dropping to intermediate time frame and then lower time frame for entries. And also maybe we can drop to 5 minute chat to see if we can find the entry target. So right here it is forming lower low, lower high, lower low, lower high, lower low, lower high, and lower low, went on to make lower high, right? So definitely here, the as we are on the 5 minute chart right here, so let's also find the entry setup. So we correctly identified the Asian highs and lows, and went on to form the Judas swing here, which, I mean, where price had aggressively swept all the Asian lows to. Sorry, I had to go back because there was some technical issue. So yeah, all right. So uh, let me just reframe where I was. So I guess we are discussing about the Asian highs and lows. So yeah, look at the ping box here, which is primarily representing the Asian zone. Yeah, notice the how the price is tightly bound between the high and low. It's basically accumulating. So how always think of how the algorithm thinks about this. So this represents resting liquidity on both sides of the market above the Asian highs and the Asian lows. Because our higher time frame bias from the daily and 4 hour chart is bullish, we're anticipating a manipulation move to the downside to sweep all that sell side liquidity before the real expansion begins. So right here, let me take out. Let me just move this here. So this is the London Open, right? And you can see the manipulation here. So it's not just like a small move. Price drastically moves. You can see how the price is aggressively dropping down, like breaking that Asian low. So this move basically induces all the retail traders to uh, go short on the breakout, and it automatically triggers all the stop losses of anyone who bought during the Asian session. Uh, but once you form a low here, you can see, I mean, how it reacts. Like it doesn't sustain the downward pressure, so we get an immediate and violent displacement higher. And this energetic push breaks above all the short-term swing highs created inside the Asian range. So that's what we call it market structure shift. We can above this, right? And in the bigger perspective, we can think of market structure shift here. Okay. So so that's where we can find that institutional footprint, which is trying to tell us that the smart money is behind this engineering liquidity at the lows and is now trying to move the price higher. So yeah, once we have the structure, I mean market structure shift with a good amount of displacement and or momentum, however you can call it, now we can look for our entry. So basically I draw my Fibonacci retracement from the absolute low of the manipulation swing to the high of the displacement leg, and we are looking for the price to like retrace into our optimal trade entry zone, which is 62% to 79%, and 70.5 being our optimal trade entry or our sweet spot. But we, I mean, we don't just blindly buy at a Fibonacci, I mean Fibonacci retracement level. We try to look for confluence. Let me just mark it. Okay, so we were discussing about the trade entry, right? So yeah, after making this runner low here, which is the day low, it retraced back upwards, and see if you can see where it tried to touch this fair value gap which is created, right? So let's try to first, before that, yeah, you try to touch this fair value gap, fill its orders, and rally, strong rally upward towards where can we expect it, to the previous day high. That's where the next liquidity targets are, right? So it hit the highs above, be above this equal highs, right? So if we can anticipate a trade here, taking a long position at the entry of this fair value gap, either we can mark this low of the fair value gap a little lower than the fair value gap, or we can also go below this low, right? Our target would be these highs here, right? So yeah, that would be that would be the trade here. So yeah, I'm right now ending that. Also one, if we can plot an OT optimal trade enter here using our classic ICT OT from the swing low to the first displacement leg, we can get the targets. So this would be our first target, and this would be till the third standard deviation. See if you can see these, or let me just zone it out. So there's basically a confluence here. We can expect the price to move until this, move till this price range. So we can place our take profit till that point. Just- there are two ways to do it. One is this, targeting the previous day high, or maybe if it's more riskier entry, then it would be this case. Both of them are highly profitable A plus setups. So that'll be all for today. I hope this breakdown helped clarify how to like piece together all the multiple time frames using these ICT concepts. So yeah, we'll catch in our next video to see and understand a few more concepts. So until then, trade safe, manage your risk, and see you later.